Hello, traders, and welcome to a new episode of Beyond the Charts. In this session or in this episode, we're going to go through all the economic releases from last week, and we saw some actually quite important releases last week, especially the PCE, which is the Fed's favorite gauge of inflation. We saw inflation ticking down a bit, which is good news, which increases the probability of a rate cut next week. So next Wednesday, we're going to have, or this Wednesday, after a couple of days, we will have the interest rate decision from the Fed. The markets are pricing in a 90% chance that there will be a 25 basis point rate cut this Wednesday. And the markets are watching closely to see what Jerome Powell has to say after the interest rate decision in his press conference. So now let's get to the economic calendar and see the data points and how they impacted the markets last week so that we can prepare for the week ahead and understand the narrative that is going on, especially in terms of the interest rate decision coming from the Fed. Let's get to it. Okay, so we start with Monday. Okay, so last Monday we had the S&P Global Manufacturing PMI, we had the ISM Manufacturing PMI, and the ISM Manufacturing Prices. The S&P Global Manufacturing PMI previous reading was 52.5, the forecast was 51.9, and the actual was 52.2. So that was a slight beat. It was a slight improvement. The manufacturing expansion held steady, which is over 50. New orders and output are up modestly, meaning like there is resilience despite of tariffs. All right. So how did that impact the market? We saw the industrials go up 0.3%. The S&P gained 0.2%. Gold remained flat. The USD gained 0.1% after this release. Now we move to the next one, which was the ISM Manufacturing PMI for the month of November. The previous reading was at 48.7. The forecast was 49, so they were expecting an improvement. The actual came in lower than both, actually, at 48.2. So that's a miss. And the contraction is deepening because we're below 50. So we're in the contraction territory. And it even like missed the expectations of the slight improvement. The new orders and employment are weak. And there is a divergence between the regional and the national. So that's why we can say that the contraction is deepening now. Now, as for prices, the previous was 58, the forecast was 59.5, and the actual came in at 58.5. So lower prices. What does that mean? It cooled slightly. Prices are cooling slightly, more than expected. Because input costs are easing, now everyone can see that the oil prices and the energy prices is dropping. So that is a huge factor in cooling prices because you need energy to produce or to do anything in life, basically. Okay, so that's good for the inflation fight, but it's it might show some weakness in the overall economy, but because like we have a reason, which is the lower energy prices, that's why we're seeing this cooling off in the ISM manufacturing prices, which is good for inflation long term. Okay, so that's it for Monday. How did those two numbers, the ISM manufacturing PMI and prices, affect the price or the market? Now, the stocks and indices stayed neutral. Gold gained like 0.1%. The FX majors, mainly the USD, lost 0.1%. So no major impact there. That's it for Monday. Let's now move to Tuesday. Okay, on Tuesday we had the Fed Chair Powell spoke. He had a speech very late in the US session. or very actually no, very early in the Asian session. So what happened here? Um, Powell called the economy solid. He said that the U.S. economy is still solid, but flagged that tariff inflation, is still like the tariff inflation risk is still high, and the job market is cooling, which means that they might be like they have room to drop rates more or to cut rates more. He said that they're going to stay data dependent, which I don't believe anymore because they decided to cut 25 base points without actual numbers coming from October. We had zero data coming from October, and they canceled the release of those numbers. Yet we saw a 25 base point cut, and the numbers weren't all in favor of a rate cut, even coming from September or November. Not all the numbers are in favor of cutting rates, but still we saw that uh, they're cutting rates, or like the markets are pricing in like a probability of a 90% that they will cut rates next Wednesday. So data dependence is not something I believe very much anymore, because if you're data dependent, how come you're cutting rates without data? So that's what he said. That's what Powell basically said on his speech. No preset path for rate cuts, but there was a balanced dovish tone. So like he's preparing the markets for the rate cut next Wednesday. So what does that mean? It means that easing continues if needed, but the Fed, like they're claiming that they will be watchful on prices, which reinforces gradual cuts. Now, how did that impact the market? How did the market react to this speech? The Nasdaq gained 0.4% on reassurance. The gold gained 0.3%. The USD lost 0.2% because rate cuts makes the USD less attractive as a currency. Okay, it becomes less yielding and less profitable for traders who actually, or maybe investors, maybe depositors, whoever. Okay, so that's the first thing. The second thing we had on Tuesday was the CPI, year on year, coming from the Eurozone. The previous was 2.1%, the forecast was 2.1%, which is very close to their target of 2%. The actual came in slightly higher at 2.2%. So the core is to 2.6%. But the headline, which is this number that we're looking at, um, like ticked up slightly. That's no big deal because it's like 2 steps away from their actual target, which is 2%. Um, ECB pause is likely now after this reading because they will need to keep rates higher so that the inflation will come down to 2%. But uh, cuts are coming. I believe cuts are coming soon. Maybe not this month, maybe next month or next meeting. We'll see. So how did that impact the market? The euro stocks remained flat. The gold remained neutral. Euro USD lost 0.1%. Although it had to, like after this release, we should have seen euro go even higher. But maybe this was priced in. That's why the euro dropped after this release. Although this number should have been positive for the euro. Okay. Now we move to Wednesday. Wednesday was a heavy day in terms of data. We had the ADP non-farm employment change. The previous reading was at 47,000. The forecast was 5,000, but the actual even came lower than both at minus 32,000. So what does that mean? That's a shock contraction in the jobs market. Private hiring is negative, uh, and That's the weakest we've been since the pandemic, the COVID-19, and that's a pre-NFP recession flag. Usually, traders watch for this number before the non-farm payrolls to understand how, or to have an indication of how the NFP will come. So how did that impact the market? The Nasdaq lost 0.5% on job sphere. The gold gained 0.4% as a safe haven, and the USD lost 0.3%. Now, next we had the S&P Global Services PMI. The previous reading was as 54.8, the forecast was 55, and the actual came in at 54.1, which is lower. That's a miss, but still an expansion. So services slowed slightly. Employment is still up, and the key sector, which is the services, is still resilient, which is the backbone of the U.S. economy. How did the market react to that? S&P lost 0.2%, the gold gained 0.1%, and the USD lost 0.1%. And next we had the ISM non-manufacturing PMI. This number was positive. The previous reading was 52.4. The forecast was a drop to 52, and the actual came in higher at 52.6. So that's a small beat. Services grew faster, new orders are strong, which offsets the ADP weakness that we saw here, the minus 32,000. Okay. So how did that impact the market? We saw the Nasdaq gaining 0.4% after this release. The gold remained flat, and the USD gained 0.2%. Next, we had the non-manufacturing prices. Okay, so the previous was 70, the forecast was 68, and the actual came in lower than both, which means prices are cooling. It cooled actually pretty sharply. Service inflation is easing, and that's a dovish sign for the Fed, which gives them another clue that they should cut rates because inflation is going down. Okay. So how did that impact the market? The S&P gained 0.3%, the gold gained 0.2%, and the USD lost 0.2% after this news release. Then we had the crude oil inventories. The previous was 2.774. The forecast was a shortage of 1.9, and the actual came in as a surplus, a small surplus of 0.574. So demand is softening, but that's mildly bearish for oil because, as I told you, it's slightly, that's a small surplus of like 500,000 barrels, which is really nothing for an economy of USA's economy. All right, so how did that impact the market? Energy stocks lost 0.3%, the Dow lost 0.1%, the gold gained the 0.1%, and the USD lost 0.1%. So no major impact there, but it moved the market slightly. But as I told you, that's like a normal reading. Like anything slightly above zero or slightly below zero is okay. All right, so then we had finally on that day, on Wednesday, we had the US President Trump speaks. We had the speech of Trump. All right. So what did he say? He basically, like the standard rhetoric, he pushed tariffs, touted growth, and warned on inflation, and said that the Fed has to cut rates to boost the growth of the US economy. So what does that mean, or what does that do to the markets? It adds upside price risk and adds more uncertainty. So what happened to the market after this speech? The stocks and indices, mainly the S&P, lost 0.2%. Stocks and indices were volatile at the time of the speech and even slightly after the speech. Gold gained 0.3% on uncertainty, and USD gained 0.1%. So that's it for Wednesday. We move now to Thursday. Thursday, we only had one number, which was the initial jobless claims. The previous reading was 218,000. The forecast was 219, so an increase in jobless claims. But the actual came in lower than both at 191,000 jobless claims. So less people or fewer people are claiming to be jobless in the US, which is good for the jobs market. It's the lowest in months, which contradicts with the ADP number that we saw on Wednesday, On Wednesday, there was a weak reading in the jobs market, but this reading is actually strong and it's the lowest in months. Um, the labor is still solid, and it counters the ADP weakness. How did that impact the market? The Dow gained 0.5%, the gold lost 0.3%, and the USD gained 0.3% after this release. Now we finally moved to Friday. On Friday, we had the core PCE, the monthly and the year over year. So month over month and year over year. Those numbers are coming from September. You need to understand this. These are not November's numbers. Those are the numbers that got delayed because of the government shutdown. So we have the core PCE price index month over month. The previous was 0.2. The forecast was 0.2. This calendar is not updated, but the number came out as 0.2, so as expected. But the pleasant surprise for the markets was that the core PCE year over year, the previous was 2.9, the forecast was 2.9, but it came in at 2.8. All right. So what does that mean? It cooled more than expected, and which gives the Fed more room to, or it gives them like a solid reason to cut rates because inflation is going down. So no need to keep rates higher for longer. So that's a dovish win, basically. That adds to the odds of a rate cut next Wednesday. So how did the market move after this release? We saw the Nasdaq gaining 0.4% on cut hopes. The gold gained 0.3%, and the USD lost 0.2%, which makes a lot of sense. Now, overall, that's it for the economic calendar. Now, overall, the numbers from the US were mixed. We had weak ADP, but we had like good initial jobless claims. Like the PCE is tamed. We saw 2.8 year over year in comparison to 2.9 previous reading, which fuels the cut odds. And we saw manufacturing soft, but the services are okay. The overall market vibes were like stocks like gained 0.9% weekly. The S&P, the Nasdaq, and the Dow Jones like were very close to all-time highs. And I believe that we will see a Santa rally at the end of this year, closer to the last 5 days of trading in of December. We're going to see a rally, which is called the Santa rally. Santa rally is basically the last. That's historically a proven thing. So 70%, 75% of the time, markets tend to rally at the end of the year, and they call that the Santa rally. So this aligns. If the Fed cuts and historically the markets rally at the end of the year, I expect to see new all-time highs on the US indices. So basically, it's getting clearer a little bit after they reopened the government and after we saw the as we get closer to the Fed decision, we see that they're going to cut 25 basis points. But the markets now know that they will cut 25 basis points. But what they don't know and what they will be watching for is what Jerome Powell has to say about next year, about 2026. What is he going to say and what is he going to promise the markets? Are we going to have more rate cuts? Are we going to pause for now and see how the inflation progresses? And by the way, guys, next year, like next May of 2026, there's going to be a new Fed chair, and people are saying that Kevin Hassett, that's a guy that Trump likes, might be the best candidate. If Hassett takes the position, we're going to see sharp or very aggressive rate cuts. Because he agrees with Trump's opinion on rate or interest rates in the US. So let's see how that goes. We'll be watching next Wednesday. Next Wednesday, we're going to see high volatility. So, guys, please, as always, I keep telling you, use protective stops, trade responsibly, and do not enter like while the market is still very volatile. Wait till the market cools off. It cools down after Jerome Powell finishes his speech, and then you can safely enter. But before that, make sure that you stay aside and watch for clues from the Fed chair. All right, guys, I hope this was helpful. If you have any questions, please drop them in the comment section below. I make sure to actually go through the comments every now and then to make sure that everything is understood and you have understood what I tried to explain. So, as always, trade responsibly, and I'll see you on the next one. Take care of yourselves. Bye bye.